global growth will come in at about 2.7% this year. We've revised that down from 3.9%. We initially thought it would be a pretty decent year. Of course, March came around and Russia's invasion of Ukraine happened, and that changed things immensely. We are expecting full year recessions, so not just technical recessions in Europe and the Eurozone, in countries like Germany, in Italy, in Austria. The inflation in the US, although we think it will peak and will come down from around Q1, the end of Q1 onwards. Still inflation high, meaning that US growth will be rather tepid next year. World growth coming down next year, and then in 2024 going to a level that it reached in this year. North America, pretty much the same story. In the Eurozone, negative 0.4% growth next year across the Eurozone. And then there is a bit of a bounce back, but not by much in 2024. So the Eurozone will have two challenging years. And then APAC, as you can see there, very high growth and very consistent as well, right? So growth of around sort of 3.5 to 4% across those next 3 years. We don't think that in our forecast period of the next 5 years, any of these countries will be made to choose. We do think that they have the kind of diplomatic and economic heft to sort of balance between these two countries. Of course, as the US-China rivalry increases and there is more competition, especially in certain industries, like the tech industry, there is some benefits from that for Southeast Asia, right? Receipts will actually reach their 2019 level, but the big caveat there is that, that $1.4 trillion, which will match 2019, is really a lot of that contribution is by inflation, right? So that's the reason that receipts will come back to 2019 levels, but tourism numbers not quite there.
For the full year, we are projecting a growth of 8.2% for 2022, which is a relatively healthy rebound over the 3.1% registered for 2021. The double-digit growth in the private consumption and private investment numbers are sort of a good sign in terms of where Malaysia is actually performing and how rosy it is in terms of the recovery and economic health for Malaysia. So you can see that the economic players are more open to spending, households and businesses in general, and also more willing to invest and expand their productive capacity. Generally expect growth to actually remain respectable in 2023, although it will undoubtedly be slower than this year. So our current projection is actually for growth to actually slow to 4 to 5% next year from 8.2% this year. We feel that Malaysia cannot actually escape the ripple effects from the slower global growth, and in particular, the slowdown in consumer electronic demands will impact the semiconductor sector. However, I think on the flip side, the broad and diversified domestic economy actually provides a steady base for continued growth. So private consumption will continue to be the main anchor in terms of driving Malaysia's economic growth, and there will be further recovery once the labor market also continues to recover. So some of the key risks that we are actually looking out for is globally will be the geopolitical tensions. If it intensifies, it could provide more downside to our growth forecast, or any severe or significant stagflation or recession scenarios could also impact our forecast on the downside. Domestically, some of the key risks that we are also looking out for is the sharp rise in food prices that could impact consumer sentiment and private consumption momentum. And another one is also any form of prolonged labor shortages. We do not think Malaysia will enter a recession next year. I think Malaysia is coming out from a very strong rebound this year, and that should provide a very ample, a very strong, steady base for continued growth next year. So I think a recession risk is quite far off for now.